Hello and welcome to WPP Media Intelligence Podcast. I'm Kate Scott-Dawkins. I'm joined this week by Jeff Foster and Nidhi Shah, and we are going to run through, so much data this week. This was I heard someone, maybe an analyst, compare it to the Super Bowl or Christmas of the year because there's just so much. We had the Fed meeting, we had earnings from so many different companies. Did you guys keep up?
Yeah, it was definitely a whirlwind between that economic news, tariff news. It was definitely a very intense and fast moving week.
Yeah, the tariff bit was definitely a bonus. What about you, Nidhi?
Yeah, lots of gifts along the way as well. So lucky us this week.
I'm excited to hear what you thought was a gift this week that I'm looking forward to hearing about. We'll do a quick run of show. There's a lot in the world of economic news, globalization, deglobalization, big themes from our This Year, Next Year report, things that are impacting the future of advertising growth. We'll touch on tariffs and economic news, particularly. We'll talk about different advertiser categories, CPG and auto, and how those are influenced by the economic news. And then there are a shed load of media owners that announced earnings this week, from Amazon and Booking to PayPal, Comcast, M6 and TF1, and Spot and Reddit as well. So there are plenty of things for us to talk about. I think we can jump in with some of the big economic headlines this week, how we're thinking about really, this period we're in of, as we talked about in the, our forecast report, breaking this long-standing trend of globalization that we've been on, and the tariffs, and even just this morning's announcement on trying to stem the flow of transshipments, which is products that come from one country of origin through another, to sort of mask or change the country of origin for tariffs, what that's doing to sort of the global economic picture, global supply chains. It was mentioned by tariffs in general and this change to supply chains was mentioned by quite a few companies. I noticed CPG auto within that. So what are we feeling about some of the recent news this week?
I would say still more uncertainty. I don't know if a lot of things have been settled. I think, we're still in these early stages of it, but some of these signals that we're seeing are pretty much aligning with what we had said in TYNY. So I think it's interesting to see all that come into focus.
Yeah, pretty much the same here as well. I mean, in EMEA, hearing a lot about uncertainty and, the new tariffs and kind of mixed feelings across the board over those. And, certain sectors, particularly luxury, feeling that kind of pinch still from a slowdown in Chinese consumer demand, for example.
Yeah, the luxury slowdown, auto, certainly some companies being hit, especially in terms of Chinese demand. So feeling that across CPG as well as luxury and auto, although I think it's more pronounced luxury and auto. There's, I would say, certainty, at least temporarily, for some of these tariff numbers we have now gotten more clarity on from the US administration. I think we're still hearing from companies is how that's going to translate into the back half of the year. So Amazon's earnings, they talked about not having seen much impact in the first half, not knowing exactly what was going to happen in the second half, but their sort of pitch, I think, to investors and consumers is we have so many sellers, they're all going to take different mitigation approaches to tariffs, and therefore consumers can pick and choose amongst those depending on price and country of origin and everything else. So that was at least one view on that. We did have P&G talking about their expectations for the impact that tariffs would have on some of their costs for the year. I was just going to try and find the actual number they spoke about. The notes for this week are insane. So P&G estimates a headwind of around 200 million after tax from unfavorable commodity costs. Again, things like coffee and cocoa are still creating a bit of a headwind for a lot of companies in the CPG sector. And then the outlook includes around $1 billion before tax, or approximately 800 million after tax, and higher costs from tariffs. So we are starting to get some expectations around the amounts that importers to the US are looking to shoulder, I guess.
Yeah, and then we're also hearing more commentary about either consumer pullback or soft consumer spending. So, you can see where this could potentially lead down for the second half of the year.
Yeah, well, inflation in the US it came at 2.8% annual, so year over year, and consumer spending slower. The Fed elected to hold rates where they are. Um, Nidhi, what are the latest sort of retail sales, consumer spending? What's the vibe in the UK, at least in that sense?
Yeah, I think there's a lot of slowdown, and considering in the UK as well, we had a lot of focus on the national insurance contributions and the taxes going up this year. So businesses feeling that pinch as well as consumers. I would still say a lot of healthy growth in kind of the eating out and kind of the takeaways and the services part of that.
Non-goods, yeah.
Yeah, and kind of services inflation as well in EU has been higher than goods. So that's been kind of the brightest spot, I would say.
That was one of the positives that was pulled out of the spending and PCE inflation was that the services labor, I think, was not necessarily seen as contributing a lot to the overall inflation. So not in that region of price wage spiral that a lot of economists do start to worry about. Let's let's dip into a few of the media owners. Let's start with a look at our new sort of commerce headline, right? So within that bucket, we have both the retailers that have always been part of our retail media segment, Amazon and eBay, and then we have travel media networks like Booking and PayPal, financial services media networks. So we're gonna group all of these under a commerce heading, and let's jump into some of that. Nidhi, do you want to kick us off?
Yeah, absolutely. And I think it's the gift I was talking about earlier in the podcast, right? Growth is still continuing, not just for retailers, but marketplaces such as Amazon, they grew their advertising revenue by 22%. I understand not all of that is retail, but a vast majority of it is. And also, in other sectors as well, these new advertising models we've been discussing about in TYY in the form of travel networks and financial services. Bookings seeing healthy growth of 8.3%. PayPal, while they don't disclose advertising revenue, they did mention growing their offsite ads and launching kind of new ad store formats, which means that, you can browse, shop, and pay directly within the ad unit without leaving the content, which I think is something we're hearing from multiple players within the space. And last but not least, Amazon, first party kind of its platform growing about 17%, which is quite robust if you think about it in terms of it being on an FX neutral basis. So
Yeah,
quite
well, on a
healthy
constant
growth.
currency basis, Amazon ads growth picked up. It
Yeah.
accelerated in Q2. Again, some of that may be tariff induced, right? People pulling forward purchases and advertisers wanting to get ahead of that, right? Prime Day was in July, so we won't see that evidence until Q3. Yeah, but they were very much sort of, we'll see where we go from the rest of the year.
Yeah.
And I think also for the Amazon sales, right, the constant currency growth just on sales between the North America division and international being the same speaks to kind of the impacts that, are not so evident in kind of the second quarter, especially with all the de minimis rules and tariffs. So I thought that was quite interesting.
Yeah, no, I agree. And it was kind of reviewing the Amazon earnings and putting it like within our framework of TYNY. It made me think of two key things: that streaming, seeing continued growth there, and of course, retail media, some areas that Amazon is very, very well positioned for future growth. And especially with, adding more sports onto the streaming side on Prime Video, just makes you think of, what the potential could be for Amazon down the road on the advertising side.
Yeah, room to grow, right? They're still looking at launching Prime Video in several markets this year. Obviously, those tend to be sort of higher value ad unit than a sponsored ad listing, which is still, at least from the last time they mentioned it in earnings, the majority of their revenue. But that alone, rolling out to more markets, even Amazon ads as a product. And we've just gone through this process, right, internally of allocating in our mind where all that revenue sits in the various markets that they play in. But it's still less than 20 or so, right? And so when you think about the number of markets that Google and Meta are already in, there's definitely impact that can be seen in terms of growth by just adding new markets, let alone then also adding ad products and all the rest of it. I will say in terms of, the picture then for advertising is quite good, right? I think some of the investor reaction, if we have listeners who are thinking, well, why did the stock go down then? But that tends to be very heavily tied to AWS and their cloud services. Growth there was, I think, 17%. I'm just trying to find,
that
17%.
certainly got most of the headlines on the financial news networks.
Yeah, it was slower than growth at
The
Google
competitors,
and Microsoft, even though those are smaller providers, and so it tends to be a little bit easier to grow at those higher levels. Just, I think investors also looking at AI and how much the company is leading in that space or not, and able to compete in that AI cloud picture alongside Microsoft and Google. So I think, but for us and our interest in terms of advertising, it was very strong earnings.
Yeah, lots of talk about a new James Bond too. So
Oh yeah. Now that they own
on the earnings call,
yeah. I just always think broccoli when we
yeah.
talk James Bond.
Well, yeah, they've owned it for a long time up until
Yeah,
recently, so
yeah.
understandable.
Look, we covered PayPal and booking. Did we get into the actual number? We had eBay too, right? Interesting there when you think about people maybe avoiding new goods due to tariffs and looking at resale maybe more as an option. Did they lean into that narrative, Nidhi?
Yeah, so for the first quarter, and eBay mentioned particularly about the impacts of tariffs and seeing the effects of the de minimis rule and the broader context of uncertainty, and that impacting primarily sellers from China. But that slowdown, resulted in shipments into the US, but that inventory kind of flowing to other markets such as the UK and Germany. So really offsetting the impacts there to kind of broadly balance and being a bit more kind of moderate.
Or that matches what we looked at in terms of some of the biggest downgrades we made to our advertising revenue forecast being US and China, with less impact to the UK and some markets in Europe, estimating that some of that activity was going to shift from Chinese overseas advertisers targeting the US versus targeting other markets. So interesting to see and hear that coming to life as we go through the year.
Yeah, and I think, as we mentioned about earlier, there's so much expectation about AI, and one of the big questions on the bookings call was actually whether, as a marketer, bookings is kind of seen, fall in traffic, and how the AI overviews are kind of having an impact on their search traffic. And it was interesting to just see the direct channel. So the amount of people coming to bookings directly is still continuing to grow. And they mentioned on the call that the impacts of Google clicks continue to hold up well, and really not seeing that decline yet. But the question is, for how long?
Yeah, fascinating stuff. There was a Pew study recently on looking at clicks and how few AI overview searches get clicks. And then a rebuttal, honestly, from Google and a couple of people looking at how small the sample size was, the methodology, and sort of saying that's not a good, clear picture. So I think there's a lot in this space. We were just talking to a media owner right before we hopped on this call about what they're looking at in terms of how content is influencing large language models. What do we know? What do we not know? I mean, it's just fascinating in terms of the age we're living in and what everyone on all sides of the equation is trying to figure out, especially those outside, the owners of these large language models. How do we influence it as advertisers? What do we know about our content and maybe its contribution as a media owner into these spaces? How are we now blending PR, public relations, and SEO and advertising, right? We had a conversation around, will marketing to consumers always look different than marketing to bots? Or as bots are trained to be more human-like, will that all be the same? My point of view is no, right? That I think there's always going to be a difference between innately emotional decision making by humans versus distinctly rational decision making by large language models and assistants. But so much of that is also going to be impacted by the specs that are written into these assistants and the reinforcement learning that they go through and the reward structure they have in place, which makes it so important that we all stay on top of this, right? As those within the industry, to make sure that we understand those choices that are being made as much as possible.
Yeah, exactly. I think that sums up the takeaway is there's still a lot we don't know, and there's a lot of different ways this could go. But I agree with you. I think, for a lot of decisions, there is that emotional component, and it's, how can AI quite replicate that? I think on certain purchasing decisions, maybe some, it's going to get down to a very granular level where some might be a little bit more cut and dry, whether it's, if it's something a little bit more a product that you're accustomed to and is more price oriented. So I think, you might see some very distinct type of differences in the way that agents will function. But generally, I agree with you. I think a lot of things can be made, especially trying a new product, for example, will be very emotional based rather
we just
than
don't
maybe
know.
logical.
An AI agent may realize that I tend to buy things that are in blue bottles instead of things that are in orange bottles. Like, who knows, right? It's not a pattern that I would necessarily pick up, but an agent looking at just data and data points maybe sees that and thinks, okay, well, instead of choosing strictly by price for these things, I'm going to choose blue bottles. Who knows?
Right, and you end up purchasing a very expensive or premium item that you weren't expecting because it's in a blue bottle.
Well, then you get down to the personalization, right? Does the brand understand that? And they may sell, an orange bottle of this same shampoo to one person and a blue bottle to me. I don't know, right?
Yeah, it's just it's fascinating, just the rabbit hole you can go down thinking about this.
100%. Well, speaking of influencing AI models, then let's take a quick look at Reddit, which also reported this week. Again, accelerating. It's, we have some messages from certain media that are uncertainty and pullback. And then you have a lot of these social players, digital players that are accelerating into the second quarter. And we have yet to see where that goes in the first or in the second half. But, again, maybe we were slightly too pessimistic, just more share shift into these players. It's going to be really interesting. So ad revenue for Reddit increased 84% year over year to 465 million for the quarter, and other revenue increased 24% year over year to 35 million. Daily active uniques were at 110.4 million. So these are still very different on scale to a Meta, for instance, which was 3.5 billion daily active users, I think it was. And the difference with one of the differences with Meta and Reddit, all 3.5 billion of those are going to be logged in. Half of the Reddit 110 daily active users were logged in. So I think that's one of the things they're obviously looking at, and investors are looking at for that too. But I find that some of the initial quotes from management are really interesting too, right? To understand what they're leaning into and signaling to the market, whether that's investors or advertisers. And so the quote from the earnings summary here from CEO Steve Huffman, quote, "Reddit is built for this moment. In a world where connection is increasingly rare, our communities show how valuable human conversation and knowledge really are. We're focused on growing globally, scaling sustainably, and making Reddit the most trusted place on the internet." Really leaning in, so unquote. Leaning into those human factors, the trust and credibility piece of that, right? I mean, I think Meta's opening statement from Zuckerberg, and I don't have the exact quote here, but really basically about bringing super intelligence to everyone personally.
Yeah.
Sort of a different vibe there with
Yeah,
that one.
I'd say in a very good way, Reddit feels, like a throwback to like almost original, like finding your community and your people. And I think they've really done a good job of embracing that. And I mean, just the ad revenue increase, I think kind of proves that point.
Yeah. Should we touch on Meta before we jump into some of the TV players?
Yeah, let's do it.
So Zuckerberg talked about creating an elite talent dense team, which has definitely been what's been dominating news headlines, I think, recently. Revenue was up 22% on a reported and constant currency basis. They talked about benefits coming from the Advantage Plus suite. They said nearly 2 million advertisers had adopted Gen AI image creation tools, companies and advertisers using AI-powered translation in Q2. So definitely lots about how, and I think for them and the message for investors is, yes, we're spending even more on capex, but we are, it's actually driving improvements to revenue and ad performance too. I think what's interesting when you go back to that initial quote around wanting to bring super intelligence to everyone sort of on a personal level. And one of the interesting things that my predecessor, Brian Weiser, always questioned the use of a metric like ARPU, or average revenue per user, for a company like Meta, or even a Reddit, which also reports ARPU, right? Which is that the revenue doesn't come from the person. That makes sense in cable when it's the end consumer
Right.
who is
Paying
buying a
for it.
cable package.
Yes.
And so measuring average revenue per user or consumer makes sense. But when all of your revenue is coming from advertisers on the other side of those networks, is that really the right metric to be thinking about? What you want to be looking at is, how much the advertisers will bear. And in that sense, you have to wonder about the motivations in creating these digital assistant products that are ostensibly for the people using them, but ultimately have to drive advertising revenue unless they're going to completely change their business model.
Yeah, it's an interesting topic because, yeah, compared to traditional media or television, you're right, it's consumer driven on capturing that revenue, but here it's a lot different, as your primary client is the advertiser and not necessarily the end user, on that end. But yeah, I think it's, it makes you think a lot about that business model, but it's interesting.
And I kind of agree on that as well, because I think it's also a question of the transparency for advertisers, right? We're quite early on in this journey, and there's a question on the call about, the return on investment on all the capital expenditure, and they kind of split it up into two parts. Core AI, being able to measure that, and they're doing good, but then the generative AI part, they mentioned about that they don't expect that to be a meaningful driver of revenue this year or next year. So I think there requires to be a bit more transparency of what this all entails.
One of the things I picked up on, I think particularly in our role working for WPP Media, was what a huge point they made to say, look, our generative image tools are for small and medium-sized businesses.
Yeah.
And agencies still have a role, in helping large brands. It was just really obvious about how much they were trying to get that message in. They mentioned it at least twice, which I thought was interesting. I mean, yes, it's something we've been saying, right? For the most part, there is still a benefit to large brands who have their own agencies, their own creative teams, really strong brand images and messages that they can draw on, and ideally their own AI models, right? Which are pulling on all of that history and building custom creative assets for them. And so it's something we've been saying, but it was interesting. I think a slight difference and change in tone from last quarter's call, where Zuckerberg basically said any advertiser, this is what I'm paraphrasing here, the feeling was any advertiser can bring us their entire budget and just we'll do the rest. So it was really interesting, I thought, sort of change in tenor between last earnings call and this one.
Yeah, I definitely picked up on that as well. It was interesting to see that shift. I don't know if it was a subtle shift or not so subtle shift, but it also made me thinking about that small and medium-sized business that we saw in our research that makes up 75% of the over $1 trillion. And with Meta and all these other companies investing all of this money on the AI and the self-serve platforms, it started making me think: can legacy media, can you even compete with that? Like, what is your strategy? Do you even go after that market? Because we know that they are investing in those tools,
Yeah.
but just seeing these continued strong growth numbers, knowing that a lot of the Meta revenue and even the Google revenue is coming from small and medium-sized business. If you're a legacy media, do you make a half-hearted attempt to try to capture that? Do you go all in? It just got me thinking how that's going to look soon, considering that's such a huge part of the market.
Well, it's maybe a great segue into some of the EMEA TV earnings because ITV mentioned this. We've talked about the UK TV networks and media owners making a real push into this and making their products more available and usable for smaller and medium-sized businesses. Maybe the question is, can they do it, quickly enough and profitably enough to really staunch some of the losses that we're still seeing, especially with a tough comp, right, Nidhi, from last year?
Yeah, and I think there's a lot of focus, not just amongst media owners, but generally across kind of the total advertising industry on costs, right? And coming from like the first half, if you look at advertising revenue declining for a lot of the broadcasters, and there are obviously a lot of efforts, as you say, to go and move towards self-service advertising, opening up advertising to SMEs. But it is still, kind of in the works, and it's going to happen next year. So it's not immediate. And when you're looking at some of the developments we're seeing in the kind of digital space, that's happening as we speak. So I think that's a big timing difference in that sense. But generally what we're hearing is, some common themes of that linear TV still not being offset by the growth in streaming. Studios doing better than advertising. Maybe some of that is also due to the US strikes and the writer strikes and content being pushed into this year and the benefits of that. And I think it's just interesting time seeing just that, how long the advertising revenue has been declining and what's next.
Yeah, so what did we hear from the likes of TF1 and ProSieben?
Yeah, so for TF1, they reported advertising revenue decline by 2.5%. A lot of focus on expanding on their French-speaking markets, particularly in Africa, which I think is very interesting and is a theme we're hearing across other broadcasters as well, like partnerships and finding that opportunity to be able to collaborate more on content and across channels, across regions is a common theme. So for ProSieben, they reported decline of 7%, similar to what ITV reported last week, with greater declines in kind of the DACH region compared to the rest of the other markets. So, but they do expect advertising to rebound slightly in the second half. We're just seeing a lot of the impacts of sports, for example, and the tough comparables from the Olympics last year and the Euros, but that decline in some of the French broadcasters not being so steep compared to some of the other players.
Interesting. Well, and the Olympics is going to be a big factor. Comcast mentioned it in their earnings as well. Jeff, let's go there.
Yeah, lots of sports talk, and I think the Olympics are almost 6 months away. It's not that far off. So
winter, yeah.
Though for the Winter Olympics, so they're coming up soon. So yeah, overall for Comcast, top line was solid. Revenue was up 2.1% to $30.3 billion. They cited growth in the content experiences division. So the Orlando theme park had a new opening of Epic Universe, which sounds pretty cool. Mm-hmm. And then for television, film, especially Peacock, which is always top of mind for us, revenue was up 18% to $1.2 billion. And their losses were 101 million, which is an improvement on the 247 million year over year. So
getting there.
Peacock, they're marching towards profitability, or at least towards break even. And of course, with the heavy sports slate coming up in the fall, that will be a very interesting one to keep an eye on. they did mention that Peacock represented over a third of NBC Universal's total volume of ad sales. So Peacock is, turning into a sizable chunk for the advertising business. And on the subscriber front, they mentioned 41 million subscribers at the end of 2Q, which is flat. So not a lot of subscriber growth there, but it's I think we have to wait till the fall again when
Yeah.
sports gears up to get a little
I
bit
mean, Tour de
more of a
France wasn't driving all these late
yeah.
June editions. Man.
Yeah, I think based off of the comments on the call, it sounds like the NBA was getting more of an emphasis than Tour de France. So
Oh,
that
well.
seems to be where a lot of the focus is. And then just some interesting commentary on the upcoming spinoff. Everything seems to be on track for the end of this year. It sounds like it'll be pretty much done by December, with the new company expected to operate probably by January, so somewhere in that time frame. So again, not that far off. What, 4 or 5 months away? About 4 months, 6 months.
Yeah. Okay.
And the other interesting piece was on linear cable, that domestic advertising was down 7.2%.
Yeah, and the connectivity business, right?
Yeah,
The advertising there was, I mean, that's to be expected, right?
expected. So I don't think there was a big surprise there.
Yeah, the video subscriber losses are still
Or
accumulating, and
yeah,
it's not
they
reversing.
lost.
Although their mobile subscribers surprised to the upside, I think, right?
Mobile did really well. I was just looking for pay TV customers, 325,000 loss. For mobile connectivity revenue was 5.4%, and that was mainly due to the mobile increase.
Okay.
Where we're looking at let's see, 378,000 wireless additions. So
Yeah,
not
it's pretty
bad.
good number. All right, should we go straight from Comcast into Paramount, and then I have we can chat about just all of these TV machinations and the history of how these firms have combined and broken apart and combined again.
Oh yeah, Paramount reported I guess this would be their last earnings call under the current iteration. So it was a little muted. They did not take any, they did not provide guidance. They didn't take any questions. So not a lot to go off of, but total revenue grew 1% year over year to 6.8 billion. And then looking at the DTC side, which again, is always a fun one for us to take a look at. DTC revenue was up 15% year over year, mainly due to subscriber growth and pricing increases at Paramount Plus. But DTC ad revenue was down 4% to 494 million on lower CPMs and a growing connected TV supply. I guess meaning more streaming inventory online would be probably the interpretation.
Yeah, I don't know who they're talking about there.
Yeah, exactly. It's not like there's anything else going on in that space.
Yeah.
And then just looking a little bit closer at Paramount Plus, they were 77.7 million 777s subscribers. So that's a decrease of 1.3 million in the quarter. And they attributed that to an expiration of an international bundle deal. But, a little bit similar in the regards to Peacock, not exactly, growing, kind of, stable, flattish, I guess would be probably the best way to describe it.
Did you know, because I spent some time this week looking at the Warner Brothers Discovery history, that Nickelodeon, MTV, and VH1 were initially part of a joint venture between Warner and Amex, American Express.
Oh, wow.
It's like the Warner Amex satellite communications or something like that. That group was then eventually sold to Viacom. But the number of places that Warner, pieces of time and Warner have been is fascinating. So we're gonna put an image in the LinkedIn post for this podcast and in the show notes, hopefully. People love a good map, right? A good infographic. We've tried to map out all the different pieces of, where time started and where Warner started, and how the AOL combination failed and then the AT&T combination failed, and then now we've had Warner and Discovery combine and break apart again. It's a lot to try and fit on a single page, I will tell you that. Our designers are amazing.
Yeah, I was thinking if this was like a blockchain, this thing would be like incredible. Like just all the different ownerships, the mergers, the acquisitions. It's very hard to keep track of.
Yeah, Turner Broadcasting System coming in. Yeah. I was interested. The DC ownership has been long-standing
Yeah,
for Warner. That was
DC's.
interesting.
Yeah, they've had DC for quite a long time.
Yeah. Eventually, Warner Music Group was spun out.
Yep.
Spectrum was spun out. It's just, it's fascinating, I think, to go back into all of this stuff.
Yeah, it's kind of crazy when you start seeing it like laid out, just how messy it is, and you're right, it almost touches like every piece of the legacy media tree at some point.
Yeah. Let's if there are maybe two other pieces. I know we haven't gotten to Microsoft. Will have to catch up on a couple of these additional pieces next week. There are a load of other CPG companies as well. I'd love to touch on L'Oreal and then maybe some Ofcom pieces this week. So Laura, I guess let's do Ofcom first because that has to do with TV, and we've just been on the Paramount sort of Comcast side of things, and then I'll finish on some commentary from L'Oreal's earnings.
Yeah, so another gift I got this week was the Ofcom report in the UK and Bob disclosing the top 200 channels for YouTube. So those were kind of a series of gifts for me this week, Kate and Jeff. So what did I find? Video consumption in the UK being fairly resilient. That's kind of generally concurs with our view in our This Year Next Year report as well. YouTube was the second most watched service ahead of ITV, but behind the BBC, with an uptick in over 55's viewing, which I thought was interesting.
Yeah.
And just on the kind of newly released data from Bob this week, I think what really caught my eye was the amount of kids content that has been taking viewership share. Bob disclosed that over 53, just about 53% of in-home viewing on the TV set was, from kids aged between 4 to 15, which is higher than what I'd expected. But yeah, about 9 out of the top 15 channels being kids channels.
Now remind me, this is just June data, is that
This
correct?
is the week ending 20th July, yeah.
Oh, the week ending 20th July. Okay. So I'm assuming this is sort of summer term. I know that the school years work differently there, but here, I know we also saw in some of the latest Nielsen data, they talked about an uptick in consumption coming primarily from like minors and children, because it is the summer holidays there. But that's a lot of the top content being children's content. And you can sort of look at, we talked about their growth last week in YouTube, I think at 13%. I should confirm that. But be a little bit slower than, say, the Meta, higher Amazon or Reddit. And so trying to look at the ad growth versus consumption growth and consumption share that we see from YouTube, and how much of that may be sort of kids sitting in front of YouTube content for significant amounts of time, which I'm not sure whether that's a bigger commentary on YouTube or on the scaffolding and support that parents have with young kids in countries, including the US and the UK. I will say Bluey is a great show in its own right. That could just be adults watching Bluey because it's pretty good. But probably not the majority of it. Okay, so L'Oreal, I would say across most of those that I've looked at so far, we're definitely back in the range of low single-digit growth for CPGs. L'Oreal for the first half was at 3.0%, like for like 2.4% in Q2 growth. That was for the quarter 10.74 billion euros or 12.3 billion US dollars. By region, emerging markets advanced double digits. Mainland China returned to growth. So we were talking about some sluggishness in Chinese demand earlier today. Looks like that's starting to get better for quite a few companies. L'Oreal talking about now being back in growth. There were a lot of comments from L'Oreal around AI and tech. They are one of my favorite clients for when we go talk to them about our data, and they really lean into things like our interactive charts. They want to use the data. They want to apply it into their systems. So I always, go to their earnings as well to see how they're talking about tech and AI. So this is a quote from Nicholas Hieronymus, the CEO. Innovation goes far beyond the lab to include our creative processes and our beauty tech leadership, and we constantly widen our digital moat with our investment in AI, which strengthens everything we do. I thought this was interesting. Quote, in research and innovation, AI helps us to accelerate molecule screening, take hair care. Using Gen AI, we developed digital twins of all hair types, enabling us to accelerate the discovery of new molecules with over 150 new polymers being explored in just 6 months. AI drives personalized experiences. Take Agentic AI, the famous AI-powered beauty genius. Since its US launch last October, it has driven over 500,000 conversations and is now integrated with all major retailers, end quote. So really interesting stuff. Investors were mostly interested in discussion of BETIQ, which is their advertising and promotional optimization tool. And I think the takeaway there are some long quotes I won't read all of, but yes, talking about it, building some efficiencies, but the real stress from the CEO was around how conscientious they've been at building in long-term goals and long-term, rewards or aims into this tool, such that they're not just chasing sales and quarterly sales. They really are looking at, longer-term brand building, and they're going to continue to support brand as they build this. So he was very clear, I thought, with investors on making sure that they understood that part of things, that they're going to continue to invest in brands. And he talked about, watching via social and tools, which things were taking off at a given time and applying spend behind that. So definitely leans into that agility conversation we had as a part of our forecast too, right? That brands are looking for in times of uncertainty and with rising capabilities from tech, where they're leaning into the ability to be agile and to move spend around where they can when they can. So I thought that was really interesting. Let's see, advertising and promotional expenses were 7 billion euros, 31.9% of sales. Again, it's including promotional expenses, so a little bit different than just an advertising share of revenue. Slight 20 basis point decrease versus last year, and that's where they mentioned the optimization of BTIQ. They mentioned TikTok 9 times
Wow.
in the transcript, talking about how they are, making sure that their brands are showing up there, but really across all commerce platforms. So also Amazon also mentioned Rakuten in Japan and Mercado Libre in Latin America. So not just an Amazon play, not just a TikTok shop play. And he said, quote, I would say on TikTok shop, we're seeing this channel both as a product discovery channel as much or probably more than an e-commerce channel so far, which maybe mimics what there's some news reports around TikTok shop still not really finding its groove in Western markets, right? Whereas live commerce and live shopping does very well in China and some Southeast Asian markets, just not having the same sort of results potentially in other markets. Yeah. Woo! This was a long one.
That was. Wow.
Really good, though. Awesome. And then, I was going to talk about the Olympics and out of home. We'll get to that next week, I guess. So much, and we didn't even get to everything, but we'll put the diagram and some notes up on the podcast page. And other than that, we will catch up with everyone next week when we have a few more earnings.
Oh, wow. More and more earnings coming down the pike. That will definitely be keeping us busy.
Yeah, lots to look forward to.
More gifts, hopefully, for Nidhi.
Yes, more gifts.
Send all gifts to... All right. The Media Intelligence podcast from WPP Media is meant for information and educational purposes only and should not be taken as financial advice. For questions, comments about the show, please email business.intelligence@wppmedia.com. We'll see everyone next week.